Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Mike Milligan. He is the founder of One Oak Financial, a virtual financial planning firm that prioritizes each client individually. He built the firm to combat paralysis penalty, a pattern of one-size-fits-all financial advice that leaves people unprepared for Wall Street, insurance, and markets. Mike brings 30 years of experience. He has a specialized industry degree, and he has insight from big banks and insurance firms that delivers personalized strategies that protect and grow wealth. He is a certified financial planner. He's been featured on CNBC, Fox, ABC, and NBC. And I am looking forward to today's conversation, Mike. Thanks for joining us.
Well, I'm glad to be here, Keith. This is going to be I think it's going to be a great time together.
Yeah, absolutely. I love to start though, before we dive into, the financial planning aspect of things, I just always like to find out a little bit about my guest, where you grew up, and talking a little ahead of the show, sounds like you live in Puerto Rico, but I'd like to just hear kind of a little bit of the details as to what led you to be a financial planner and kind of what you did before and where you grew up.
Well, I'm Tar Heel born, I'm Tar Heel bred, and when I die, I'll be Tar Heel dead. So if that tells you anything, I'm originally from North Carolina.
Okay.
I spent my time through college there. Really got my entrepreneur start, and started getting this affinity for money back in a little small town where I grew up called Laurel Hill. It's right outside of another smaller town called Laurinburg. But in Laurinburg, my family had an event not too dissimilar from what a lot of other families go through, where an income earner all of a sudden gets cancer, cannot work, and money goes out the door. And that happened to my grandfather. My grandmother had to pick up the pieces. They grew up. They were children of the Great Depression. So they had a big distrust of Wall Street and the government just in general. So my grandfather had a construction business that he took a lot of cash money with. So obviously they didn't have big Social Security stockpiles because they didn't pay into the system. 401ks were not a thing. I mean, my family couldn't even spell 401k if you asked them to. And so my grandmother, through some desperation, she innovated a collared sandwich, which was 2 pieces of cornbread, deep fried, where you put some collard greens in the middle, and she started selling them. And people, I mean, they're good, Keith. I mean, like I thought as a child, I thought as a teenager they were disgusting, but but it's an acquired taste.
Yeah,
and I think they're absolutely amazing now because I saw the money flow in off those things. Like that people were buying those things for $5 when you could buy a Big Mac for $1 back in the late 80s and early 90s. So I would hustle with my grandmother. She would literally say, here's 100 sandwiches and we need these to go pay Bell Atlantic, or we need to pay them to to pay Duke Energy, she needed to pay bills. So I'd go hustle with her. And then she got on the festival scene and I would just help her count her money. Eventually led me to find a banker because the Folger coffee cans in the cabinets were getting too full of cash. And so I found a banker for her to open her first account and helped her do that. She couldn't read. She only had a third grade education. But the guy wore a suit, Keith, and I thought that was just the coolest thing in the world. The only other person at that point in my life who wore a suit was the preacher man, and I did not want to be a preacher man. So I'm like, I want to dig into this banking thing. He gets to play with money all day, and so he told me how to become. So I went to college. I was the first person in my family who went to college, and at college I started hearing about trust and investments and wealth management, and I was like, wow, this is really cool. And so for the first 12 years out of college, I worked in Wall Street banks and big insurance companies. And I saw in those board meetings and in the boardrooms, I saw, profit over people and individuals becoming account numbers. And I saw people's stories get lost in a system that just, that's not what my grandmother taught me about how you treat people. So I decided to make a bold decision, and I went independent back in 2013. Not only for me, for my clients and those that went independent with me early. It was scary. We didn't know, right, what we were doing, but we figured it out. Partnered with some big firms like Fidelity and Charles Schwab along the way. We've figured out how to work with insurance companies, not have them work against our clients. And we've brought the one-of-a-kind financial plan to the market. Like the company that I have is called One Oak Financial. One Oak stands for one of a kind. And I genuinely feel just like my grandmother was one of a kind, and so many other people in the book I wrote. I have a book called The One of a Kind Financial Plan. That's not the book I'm going to recommend at the end, but it's a bonus book if anybody wants to read it. But like the stories of those people, stories I think are more important than numbers. We only have one life to live. And when you really think about it, money is just the tool to live a one-of-a-kind life. And we all deserve that. There's nobody that deserves to play second fiddle. Everybody has the same opportunities. Everybody has the ability to build something. And through our own choices or neglect or just not meeting the right people at the right time, we end up going down a path that is not inspiring. Waking up in the morning, willing to take overnight flights to go to Puerto Rico like I did last night.
Right.
So now my wife and I live in Puerto Rico. We do it for tax reasons, but we also do it because it's paradise. Why wouldn't you?
Yeah.
Like if anybody's ever been to the island, when you walk out of that airplane and you get on that jet bridge and you smell the air, how could you not realize that you are alive, right? It's not 44 degrees here and overcast and only 9 hours of sunshine today. It's 12 to 13 hours of sunshine. It's 86 degrees. There's always a breeze blowing. Why wouldn't you want to live somewhere like that? If that's what you like.
Yeah.
If you like snow, if you like skiing, go live there, right? You could do that 12 months out of the year if you want to. Northern hemisphere, southern hemisphere. Go get it done, right? But we only live one life, Keith, and I believe that One Oak Financial can build a one-of-a-kind financial plan for that one-of-a-kind life you live. But more importantly, I just want people to be one of a kind. I want them to be themselves.
Yeah, and that finances can certainly help with that. So just curious, obviously you mentioned tax reasons for living in Puerto Rico. Had you traveled there before on vacation, or what kind of helped you and your wife come to that decision?
So taxes are the biggest expense you're ever going to pay in your life. And if I'm going to say that in my book, and if I'm going to say that in my practice, and if our goal is to reduce that, I need to live it. So Act 60 in Puerto Rico allows us to pay a significantly lower tax rate than what others would pay by being stateside. Now, everything has to line up, right? We have adult kids, right? We who are two are through college, one's almost done with college. But like the other thing is my wife's mother and her aunts and uncles were born on the island. And so she is half Puerto Rican
Okay.
by genetics. But her generation, just like so many generations over so many years, right? When somebody leaves a spot and they move somewhere else, they're leaving behind what's there. So Liana's generation was never taught Spanish. The culture was there because when the women got together, they would be loud and they would make, mofongo, and they would make pork dishes. They would make all the food, but she didn't know Spanish. And so she wanted to, embrace that side of her life that she's always felt like she's missed. And so that's it's part financial. It's also part just living and, filling a void that my wife has missed her life.
Yeah. Okay. Very interesting. Well, that's neat to have that ability, and it's a lot better weather there than it is. I'm recording out of Texas here today, and it's we finally have gotten a little bit of cold weather, and it's not that cold, but compared to other places. But it's just barely in the low 50s. Started out in the high 40s this morning, so 86 and sunshine sounds really good.
That type of weather just reminds you that we're getting older because it gets a little stiffer to move around.
For sure. Well, yeah. Why don't you talk a little bit about, if you could, what One Oak Financial, some of the things that you suggest, and maybe some of the ways that that you help your clients to be able to build up their wealth, and some techniques and different things that maybe aren't always as obvious to people, but that are a good thing to do.
Well, education is something that we lack when it comes to money. People don't understand how time and a little bit more return can add zeros, if not commas, to your wealth.
Mm-hmm.
They also don't realize that the automation or disciplined automation actually is how you get ahead in life. We like to work with people in our firm who don't fit the mold of traditional financial advisors. People that want to wrestle and grab with wrestle and then grip their finances and take charge of them and really assign purpose to what they're doing. They don't want to abdicate responsibility. And a lot of people abdicate responsibility just because they're busy with their kids, Christmas pageants or sports, or they're caring for an aging parent while they're also dealing with kids. They're on the retirement side. All they did is they just saved into their 401k all this time, and they realize, oh my gosh, the taxes on this are still huge. But the same thing that got me here, I guess I just got to keep doing that same thing, even through retirement. So we like to change the narrative for people. Tax rates, your personal tax rate does not go lower when you retire unless you plan for it to go lower. So if you've ever been told your taxes will be lower in retirement, unless you plan for them, guys, they're going to be the exact same that you had while you were working, because nobody wants to downsize their life. We don't ever talk about downsizing. We always talk about going up market or upsizing our life. But who really wants to work 50 hours a week, raise kids, have grandkids, and then have, downsize your life? That's the time where you have, after all that work, all that energy you put out, that's the time you want to travel and spend time with family and give back to the community. So like if you're going to do that, your tax rates are not going to go down unless you plan for them to go down. That's through tax diversification. We also talk about there's a lot of fear and anxiety, Keith, in retirement for people. Like, I'm getting ready to lose my paycheck, right? I'm going to retire and I'm not going to have 2 checks a month coming in or get paid every 2 weeks. And how do I deal with that? Right. Yeah. And a lot of people just try to make that up on their own. They just try to figure out, well, they'll build some spreadsheet and it looks perfect. until 2022 or COVID or the financial crisis of 2008 or the dot-com burst of 2000 until that stuff happens.
Right.
Because all that stuff that happened in the past will happen again. It'll just be called something else. I mean, it'll happen. And that spreadsheet does you no good if you don't alleviate fear and anxiety, because when you see those numbers on the spreadsheet turn negative, that's when the fear and anxiety is going to build up that, oh, I'm going to run out of money. So we try to help relieve that also. And then we put some focus, and as I talked about taxes and retirement income first, right? I didn't even talk about investments. I mean, most people think about wealth as investments. Wealth is about paying as little as you can to Uncle Sam and having money that you never run out of. That's a truly wealthy person. And that person may only have a net worth of $300,000, but they're paying low taxes. They're doing everything they want to do, and they have income they're never going to run out of. Well, that's wealth, guys, right? The person who has, in the book, The One-of-a-Kind Financial Plan, I was meeting with this guy who said he had a goal of getting to $5 million. Well, he got there in 2023, and I'm on a call with him. He's 51 years old. And I said, so what's next? He goes, well, I don't know. Like, well, why was the goal to get to 5 million? He's like, well, I just didn't think I'd ever get there. Well, now that you're here, what do you want to do? Do you want to retire? Do you want to, no, I don't know. And sure enough, he made a couple bad investments and it went to 4 million and he panicked. Now it's going to take him a lot of time to get back to 5, right? Because the same risk that he took to get there because he didn't know what he was going for. Now, when he realized that, money allows you to do something, he just panicked. And so, after we talk about tax and retirement income, we then talk about investments. And investments to us, Keith, they could be anything from CDs to private placement to Bitcoin, right? And then obviously all of the traditional stuff in between. But like to us, investments are, where can I make money while reducing risk that I can sleep at night on? And for some people, right, an entrepreneur is not going to be satisfied with an S&P 500 index fund.
Right.
They're going to want to see they're going to see other entrepreneurs building wealth, and they're going to want to participate in that. Whereas a school teacher may think that the S&P 500 fund is like from Satan himself because it's got too much risk. And so we think investments can go from, as safe as humanly possible to not speculative, right? But let's just say wildly volatile. And and putting that mix together makes a lot of sense for people. And then the last two things we focus on in our practice once we get through investments is we focus on a couple of end-of-life things. Like the only person you can count on to take care of the older version of you is the younger version of you. So that long-term care side is like, living life with dignity, right? Making sure that's well planned out. And that doesn't mean buying insurance. That's not what that means. It means, do you have enough to take care of yourself? And if you don't, then maybe you pass for some to insurance, or you have the tough conversations with your family. Then finally, it's the legacy piece. Legacy is an unwritten legacy plan is a disaster waiting to happen. That's almost like a hurricane's coming and you didn't put a will in place, and so you're just going to let your kids fight it out, and that's a disaster to split up a family, quickly. And so we make sure those are put in place, and then there's a lot of stuff in between there. But most people will say, Keith, they have a financial planner, and then when you ask what the financial planner does, they say, well, they manage my money. Well, what do they talk about when you have meetings? Well, we have a meeting about once every year or once every 2 years. And in that meeting, they'll talk about, I'm doing okay. I'm fine. And, I'm like, well, what do they charge you in fee? Good. Well, what do they do for taxes and retirement income? I don't do any of that. Well, that's not a financial planner. People have investment managers. And so often we get mixed up, right? Financial planners and investment people, we all get mixed up. Right. You guys just all do the same thing, and we don't all do the same thing.
Yeah. There's definitely a difference. on that. Wealth Flow audience, pardon me for a quick interruption to today's show, but I have some exciting news that I want to be sure that all of our listeners are aware of. We just launched 3 totally unique to the market funds that are at the cutting edge of technology and AI. We have combined my 25 years of real estate experience and my recent work as VP of development for a tech company to bring 3 awesome investment options to our audience. For full details, go to our website at bobocapitalventures.com. Again, that is BOBO capitalventures.com. All right, back to the show. Maybe if we go back to maybe tax diversification, you mentioned, what's a way that people can diversify their income in a way that they're not getting taxed? What are some of the tools that you use for that?
Yeah. So, I mean, like, there's a lot of tools, right? So like if you have a lot of cash, you could use municipal bonds, but that by far and away is not the biggest way. That's the lazy way. Roth IRAs. And Keith, people say, well, I make too much money to go into a Roth IRA. Well, guys, there's backdoor Roth IRAs, there's mega backdoor Roth IRAs, and I'm not even talking like what some people on TikTok will try to use as like IULs as saying it's a Roth IRA like. I'm talking about real Roth IRAs. You can use a structure of using non-deductible IRAs, doing conversions on those. And I mean, that's good for somebody making $1 million or $2 million. If you have a 401k at work, most 401ks allow for Roth contributions. Most, not all, most do. And if they do, and you're a high income earner, you're never going to come out of that bracket. You might as well start putting money into that Roth 401k. And so there's a lot of ways to do that. If you have traditional IRA money or 401k money and you can move it, you can do something called a Roth conversion. But remember, anytime something's in a Roth, it grows tax deferred and it's tax free when you ultimately withdraw it, with a couple rules, right? So if you can get something tax free, that's great. A couple of the things that I really love, though, from a tax standpoint, is I love real estate.
Yeah.
Like I love real estate for clients. I don't. My wife and I owned a couple residential pieces of real estate, and we are not good managers of tenants. That's not our thing. But we own commercial property. We own commercial property both where our headquarters is, and then we own some commercial property in partnerships with other people. And there's great strategy around depreciating the asset, 1031ing it to a higher property as it appreciates, and then when you pass away, getting a step up in basis for the next generation. It's a great strategy to be able to be tax efficient or tax diversified. But then there's a lot of other things in the tax world. Entrepreneurs, guys, if you're an entrepreneur and you're just having somebody just do your taxes for you and you're not doing a tax strategy session, you are missing the biggest wealth tool you have. Like if you have we used to have a killer property in Norfolk on the river, pool in the backyard, thanks to a little golf tournament that happens every April or so in Georgia around Augusta. There's something called the Augusta Rule. The Augusta Rule allows you to rent out your home for 14 days per year, right? And that money be tax-free. And it doesn't have to be 14 consecutive days. I think that was probably the intent of the rule, to be honest. 14 consecutive days, but that's not the intent. That's not how it's applied. You can literally, if you're a small business owner and you have a sales team or you have an operations team, you bring them to your house and then you charge a rental rate to the company for using your house for corporate meetings. And that money is tax-free from the business onto your house. There's, bonus depreciation is back in 2025 and 2026. You're going to drive a car anyway, right? Why not drive a car that is tax-free or lowers your taxes, right?
Yeah.
So why not do that? But there's all kind. Then there's some wacky things out there too, right? Because people are saying right now that the IRS is understaffed and that we can push the envelope on what you're going to do with taxes. I would tell you not go so gray that it looks like black with taxes. There's enough room to stay in like solar energy credits, bonus depreciation, creating a defined benefit plan. If you're a really high income earner with not a lot of employees, creating a defined benefit plan, a pension plan for your company, using Augusta rule to really lower your tax rates.
Mm-hmm. Yeah, no, that makes sense.
And if you want to go crazy, move to Puerto Rico. Right.
Now, yeah. Well, speaking of, is that Act, you said it was Act 60. Is that, but you also mentioned that your wife, does have some Puerto Rican in her. She was born or has family there. Is that, how does Act 60 work? I mean, do you have to be from Puerto Rico to be able to apply that? And I guess tell us a little bit about that piece of.
No, you don't. There's 3 rules that, I mean, you have to really be a 1099 or a business owner. You can't really use it for W-2 income. It has to be money that you can import onto the island for services you do for people back in mainland United States.
Okay.
And so, like for instance, if you're a marketing person and you design websites and you provide consulting support for new ad, and you own your business, you can move to Puerto Rico and you can do the work here, but import the money for the work you've done here. If you're an author and you write a book, and you write the book while you're here on the island, but all the books are sold in the United States, you're importing revenue to the island. The couple tests, like there's always these tests that you have to maintain or you have to pass in order to get the exemption. There's the residence test. You have to be here more than you are anywhere else in the United States. So, that's 6 months and a day, unless you travel international. Like if you spend 30 days in Europe, right, then you have to spend, those get deducted, and it's just one more day here than over there. There's some exemptions around, like, people say, well, Mike, what about hurricanes? Or, what about medical emergencies? Or what if my grandma passes away? There's exemptions for all that stuff. One of the other cool things is, if you've ever been to San Juan Airport and you go between like 11 o'clock at night and 1 o'clock in the morning, that's one of the busiest times of the airport, because a minute on the island constitutes a day. So if you fly in and you get here at 11:59 at night, that's a day. If you leave on the 12:15 a.m. flight, that's a day, right? So so people use that in their favor. So you have to be here residents. You have to be closer to this community than you are anywhere else, and that comes through like charitable giving. And if you go to church, go to a church here. If you have a gym membership, get your gym here. Don't come here and be a hermit, right? Go to the restaurants, get to know your bartenders, go out to events, and then so there's the residence, the closer test, and then the presence, like you're physically like getting into the culture, right? Like español es muy difícil. Estoy aprendiendo. That just means I'm learning Spanish. I'm not fluent by any stretch, but I'm trying to learn, and I will talk it in the community. But don't do it if you're just doing it for taxes. Doing it because you want to experience something.
For sure.
Taxes are. I mean, there's a lot. Like I mentioned, the Augusta rule and bonus depreciation, and you can move a state. For almost anywhere you live in the United States, you can move a state or two over and get tax-free income in that state or tax incentives that state has. I mean, heck, in Hawaii, if you plant a native tree there, you can get like a $2,000 per tree state income tax credit, which basically can make all of your income tax free just by planting a tree in your property, right? I mean, there's all these tweaks out there. Here, the reason we moved here is because of family connection. but also because I want to get my tax rate as low as possible. Because when I say taxes are the biggest expense, I want to show people it's not mine, right? Because I planned it away. Because through planning, you can really build wealth.
Yeah. Yeah, that's interesting. There's just many ways that if as long as you know the rules and you know how you can apply it, there's ways that you certainly can save quite a bit. So there's obviously the tax diversification from that standpoint. You mentioned on one of those, though, I want to maybe dive a little bit deeper on the conversion, going to convert like a traditional IRA into a Roth IRA. So even if you're a high earner, do you have the ability, or there's specific hoops you have to jump through to make that happen? In other words,
That's a great question, Keith, because this is where a lot of people get confused. Not only am I the founder of One Oak Financial, not only do I do my own podcast, and I've written 2 books, but I'm also an adjunct lecturer at a university where I teach financial planning. What this is, so it may sounds like I'm teaching a little bit when I say this, but in order to get money into a Roth, you can do it one of 2 ways. You can contribute money to it, meaning that you have earned income, your income's below a certain amount, you can directly contribute into it. Or you have a 401k, you do salary deferral as a Roth. So you can contribute. Now, those Roth IRA has income limitations, right? You can only earn so much to directly contribute. That's why you have these tools like backdoor Roths. But most people think, well, I cannot convert. So 2 different words, contribute, convert. I cannot convert because I make too much money. Well, it's just not true. Conversion, you can convert as much as you want up to your full account balance for you being willing to pay the tax on it. So, for instance, if somebody has a $2 million traditional IRA or 401k, if they want to convert it all, go ahead. But you're going to pay over $700,000. You're going to pay 37% federal tax, right? And if you have any capital gains anywhere in your portfolio, you're going to also pay that net interest income tax. But if you think tax rates are going to spike, which many people do, many people think tax rates are going to go through the roof. I mean, how can they not? Like the leading indicator for taxes in America is GDP to total debt. And it's never been higher in the history of our country, dating back, over 100 years, right? It's never been higher than what it is now. Income tax has only been around just over 100 years. They weren't here for the first 150 years of our country. But ever since they've been around, this ratio of GDP to total debt has never been higher. And the last time it was even close to this high was right after World War II. And for about a little bit more than a decade after World War II, the top tax bracket in the United States was in the 80s, touching 90%. So can you imagine making $1 million paying 90% in taxes?
Crazy.
They don't call that generation the greatest generation for nothing. I mean, not only did they go over and they fought in Europe for our freedom against Nazis and all that, but then they came back and they paid the bill, right? They paid the bill with life. They paid the bill in taxes when they got back. And if you look at our debt, even though we had that big spike from spending during that war, our debt stayed relatively low because our taxes were high. Well, we've got a $2 trillion deficit in the United States right now. That means we're spending. I mean, imagine you running the business, Keith, and you spent 7 of anything, 7,000, 700,000, 7 million.
Yeah.
But you only brought in 5. 5,000, 500,000, 5 million. And you were at a deficit of 200,000, 2 million. How long could you run that business?
Not very long.
Not very long. And we're doing that. And so now that is compounded on itself. And the interest on the debt in the United States is 20% of all income that we bring in. $1 trillion. of the $5 trillion that our government brings in goes to interest payments. And I mean, sooner or later, there's going to be, people talk about an AI bubble. There's going to be a freaking government bubble, right? And the only way to solve it is with tax rates going up or bigger economic pain in the future. And I don't know which one's going to come, but somebody's going to make a decision sooner or later. But when I say taxes, doing Roth conversions, so people that are in high income tax brackets, we got started on this on Roth conversions because me telling somebody that's got $2 million to pay tax at 37% sounds awful until you hear the tax problem that we have in the United States.
Yeah.
So there's two problems. You got a problem with all this money, right, that is locked up that you got to pay tax on, and the United States has got a problem. Which one can you control? And that's the end goal of like a Roth conversion. Which one can you control? And if you take control of your piece, the answer is probably not doing all 2 million in a Roth conversion. It's probably doing some now, some next year, some the year after that, some the year after that. But if you don't do anything, you're going to wake up one day and realize, holy cow, the government owns more of my money than I own. And that's going to be a slap in the face. And so, man, I hope this podcast, this particular part of it goes viral, because if nothing else, folks, take control of your taxes.
Yeah.
Right? Because if you don't, you're leaving it into the control of the government to tell you how much to pay into the future.
Yeah, for sure. No, it truly is. It's one of the biggest bills. So, and there's plenty of ways to hopefully cut down on that. But as you mentioned, too many people talk to their CPA when it's time to file the taxes, but not throughout the year, and not doing the planning in advance, especially if they have an event that's happening, a taxable event, something like that, that could be planned around, and they can fix the issue if they just do a little bit of planning a lot of times. So
I would agree, Keith. You ever been out to to Target or maybe to like Chick-fil-A or somewhere, and you see a mom with 5 kids trying to wrangle them all?
Yeah.
And you're like, man, she got a hard life. And she doesn't have a hard life, right? She's just busy with love right now, trying to keep kids in order. Well, that's kind of like what a CPA is like during tax season, right? A really successful CPA is working 80, 90 hours a week for 3/4 of the year.
Right.
I mean, truthfully. And to get on their calendar to do real tax planning, it makes it really hard. Now, there are some really, really good CPAs who have structured their firms so that they can actually spend time with their clients. That's what you should look for. But when you find that person, make sure that they're kind of capping out on the number of clients they have, or otherwise in the future, they're going to be in the same boat as everybody else, because it's a volume business, right? Doing tax returns is a volume business. The more you do, the more you make. And remember, CPAs are entrepreneurs, just like us all.
Right.
They're trying to build a business, build bottom line numbers, or build top line numbers so that they earn more at the end of the day.
For sure. How about legacy? That was another thing that you brought up. I think that's, there's legacy, and also you mentioned end of life. Maybe let's go to end of life first and just talk a little bit about some of the things people should be aware of when they're planning that part of things, because not everybody thinks that far,
No, they don't. And there's just some crazy stats out there. And I'm going to tell you ones that are propagated out there that are almost right. They're almost right, but they're not exactly right. One stat that's out there right now is Fidelity says that anybody who's 65 needs to have $315,000 of assets kept, available for health and long-term care costs at the end of their life. $315,000 per person. Another stat that's out there is if you're 65 today, there's 70% of those people will have a long-term care event in their life, whether that's at home, assisted living, or nursing home. The other stat that's interesting, and nobody can find that where the source is, but it says 80% of men will die married, 80% of women will die single. So I mean, think about like this end of life, right? We, I think back to my grandfather and my grandmother, right? My grandfather's the one who got cancer, but throughout their whole married life, he took care of her. He was the one working. She stayed at home. And in his mind, it was always he was going to care for her till the end of day. But he didn't last to the end of her life, because when he died, she lived another 28 years.
Oh, wow.
And when you think about those numbers, she had to take care of herself by selling those collard sandwiches. So he died married, she died single, right, when it was all said and done. And what's interesting about this is the conversations that must be had. These are like non-negotiable conversations in a financial planning conversation, whether you have it with someone like me or if you have it just around the table where you eat dinner or breakfast with your significant others, is I want to take care of you. And the other person's just got to say, I want to take care of you too. Just mirror each other. I want to take care of you. And the other person says, I want to take care of you. But we got to get serious about what end of life looks like. Right. And because there's, we've heard the saying, success leaves clues.
Right.
Right. You always know, well, end of life leaves clues also. Just look to the generation before and the generation before that. Look at what mom and dad had to deal with. Look at what grandma and grandpa had to deal with. And if you look at that, there's 6 people on each side. Then we know that some people die by accident. Some people, it's not always genetics, but it will give you some clue, right? Genetics will give you a clue. How you lived your life will give you a clue. If you go out to the bar every night, 7 nights a week for 50 years and drink 7 bourbons, well, that probably is not good for the end of life, right? Although I've heard many stories of people who ate bacon, a pound of bacon for breakfast every morning, who had lived into their hundreds, right?
Yeah.
Right. But then, so look at like your genetics, look at how you live, look at what your activity level is, and then realize you somewhat control that outcome, right? People who are, there's plenty of marathon runners who die at the age of 40, but there's also there's plenty of vegetarians who die at their 46. But if you look at the numbers there, generally people who are more active live longer. People who have a better diet live longer. People who have long genetics typically live longer. And if you're having that conversation, I want to care for you, and I want to care for you, and one of you has, like my wife and I, Liana and I, have an 11-year age gap between us. And so like she has grandparents on both of her side who lived to 100. My oldest grandparent was 91. So let's just say I live to my oldest grandparent. She lives to her oldest grandparent. Well, there's 10 years difference between our grandparents plus 11 years difference in our age. Well, that's 21 years.
Yeah, that's huge.
That's huge. And we've had that conversation, and it's a conversation that's hard to have, but we have to have that conversation, because I need to plan for our one-of-a-kind life, like the way we're living now, but also need to plan for her one-of-a-kind life when I'm not here. And so I say, and I've heard this from other people, like this is not a Mike Milligan original. Like the only person who could take care of the older version of you is the younger version of you. You have to really have these conversations with the people that matter most, because when you start putting the math behind genetics, lifestyle choices, and diet and exercise, you start seeing, there could be a gap at the end that is significant. And it's one that, when planned well, takes some of the emotion out and takes some of the fear and anxiety of being left behind and lonely.
Yeah. That's very, when you kind of put it into that perspective, it's it does make a lot of sense that you'd want to plan that out. I mean, my wife also is younger than me, and so yeah, when you really start to look at you're not just planning for yourself, and you want to make sure that you've got vehicles in place for to be sure that they can live comfortably when you're gone. So
that's right.
And how about legacy? What are some of the things that you touch on when it comes to just legacy in general?
Legacy is having a will and trust. And if you're 25 or 30 listening to this, you need to build a will and trust now, especially if you have kids at home, right? You don't want your kids, if something were to happen to you, you can go like, I have a story. I mean, you can tell I have stories, but I have a brother who passed away when he was 41 in a car wreck. And it left my sister-in-law, Melissa, and Gabe and Bella, my niece and nephew, behind. And people get robbed of life every day. It was not his fault that he was in that car accident, wrong place, wrong time. But you have to create something, right, that leaves behind a legacy for your family. So will and trust, make sure that everybody's protected, everybody knows your intentions. But like in my world, like legacy is not just that. It's my grandfather's pocket watch. It's his knife that was in his, right? I still have them. Matter of fact, I just saw them the other day. I was going through something and there they were right there. And I was like, and it just makes me think of him, right? And then it's my grandmother's collard sandwich. It's the stories of like being around the dining room table and figuring out how we're going to make those things and how we're going to sell them. Absolutely amazing times that we had doing that. I've got a person that I met by doing this named Nate, who's written a 73 chapter book about his life. It's one chapter for every year, right? That he's leaving for his kids. For others, like for my mom, she doesn't do it anymore because my kids are older, but she did this thing called Granny Cooking Camp. And Granny Cooking Camp is where she would take Grace and Paige, my daughters, down to a beach house. And for 4 days, they would just make the family recipes, the broccoli casserole, the oatmeal raisin cookies, that perfect steak on the grill, the dry rub for the ribs, and so now, like just, a couple of weeks ago at Thanksgiving, Grace is making a broccoli casserole, right? And now my mom is still alive, right? But that's a living legacy. And then they have these books of photos with the recipe that my mom would make. She'd go down to Walmart, right, and make like a 12 or 16 page book with like pictures of them cooking, but also the recipes. So now there's like 6 volumes of that book, right? So legacy is a will and trust. That's like the foundation, right? But legacy is also about the wisdom that's been hard fought and learned over the years, and the family traditions that need to go down from generation to generation. My goal, Keith, if I can do it, I would love for my Granny Elizabeth and my Grandpa Walter to still be spoken 100 years from now. I mean, they're not George Washington, they're not Thomas Jefferson, but they're definitely on my Mount Rushmore of people who ever lived. And I'd love for my great grandkids to still be talking about collard sandwiches and, have that pocket watch, right? That probably cost $1.50, right? But it has all the, I want them to have that stuff. I don't want that to be lost in time.
Yeah, no, that's all really good things. And as you said, the will and the and trust really kind of are the foundation for that from a financial standpoint. But there's so much more to it, for sure. Well, Mike, this has been good. What is there anything else that you want to be sure to convey with the audience?
I mean, I'm all about educating, coaching, and planning. And so, like if folks feel like they need a little bit more Mike Milligan and they want to hear, I teach a course called Personal Financial Planning. You can find details on that on my website at mikemilligan.com. I really believe that education is the core for building true wealth. And if you don't have education, how can you really negotiate? How can you get those extra percentage points for adding zeros and commas? And then coaching, like if you're in the financial advisory space or financial planning, you need somebody other than maybe a boss to help you in this business. We do some of that too. And then if you're a client who has like some high-end needs and you're like, man, that guy speaks different than anybody I've ever heard before in this industry, love to talk to you. But you could find all of that at mikemilligan.com. And, would love to connect with anybody who listens here today.
Sounds good. And we'll put all this information in the show notes. And then, Mike, I've got a couple more questions I ask every guest. One would just be any advice you'd give somebody who is just starting out in their financial journey?
Same advice my granny gave me: count every penny, every nickel, every dime. Just know where it's going. Another way that's said is assign your money a job.
Yeah, I think that's really good advice. How about a book recommendation? And I do want you to mention your book again. I know that wasn't going to be your recommendation, but just maybe so it's fresh on the audience's mind.
I wrote the book called The One of a Kind Financial Plan. You can find it on Amazon.
Okay.
It's the book is subtitled "Say Goodbye to One Size Fits All and Hello to What Actually Works." I know it's a good book, not only because of the reviews on Amazon's, because of like the big companies that have reached out and said, why did you say that?
Yeah.
Right. So like big institutions who have reached out and said, I can't believe you like exposed our industry on some of these things. And I'm like, well, it needs to be exposed. And so the One of a Kind Financial Plan. The other book I really love, it's called Build. It's an unorthodox guide to making things worth making. And it's like startup advice from a guy who was in Silicon Valley, worked on the iPod, and then worked on many other tech things. That whole the whole technology revolution of the iPhone, right? It feels like it's been around our whole life.
Yeah.
It's only been around for like 17 years, right? This iPhone can't even go order a beer yet.
Right.
It's not even that old. But like I'm so fascinated with how people build life-altering, life-changing, revolutionary tools that we all use. And that book delivers on the promise. Matter of fact, it's right there. Like over my shoulder.
Yeah,
it's right there.
I see it. Okay, perfect. I haven't had that recommendation, so I'll have to check that one out. I always ask for the audience, but ask for myself as well. So, well, Mike, this has been great. I appreciate having you on the Wealth Flow, and I think we'll call it a show. Thank you so much.
I love it, Keith.
All right. If you're still here, I assume that you found value in today's show and with the guests we interviewed. Please take a minute to subscribe and to review the show. It really helps. Also, wanted to remind you to check out Bobo Capital Ventures to get the first look at our 3 new cutting-edge, first-to-the-market investment opportunities. We have only about 15 spots for each fund for retail investors, and we would love, more than anything else, to have our audience be part of that group of limited partner investors. Thanks for listening to The Wealth Flow, and have a great day.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.